Currencies in Play, brought to you by Royal Financial Trading, where we hopefully have Ed Matz from matrixtrade.com on the line. How are you today, Ed?
I'm very good, Zach. Yourself?
I'm doing fine. You're obviously in your Dorset HQ.
Indeed, yes.
That's very sensible.
Sunday, I believe, but not that I can tell in my office.
Do they get live currency prices there?
No, we actually get next week's.
Oh, that's very good. That's quite handy for what you do, isn't it, really? But let's have a look at the...
For what I do. And anyone trading the markets, yeah.
Okay, well, let's have a look at the headlines of the day. Aussie dollar is starting off here with trending at highs propped up by hawkish RBA. And looking at the chart, we've already had big move yesterday, late yesterday, and we're consolidating that in a range, I suppose, what's that, 79.10 to 79.40.50 at the moment. On to euro dollar, almost tested 116 as it rocketed higher, correcting lower on dollar and eyes on ECB. Any views on the euro at the moment, Ed?
Yeah, well, today's the day to chew the cud, really. We've had a lot going on the last few days, healthcare, obviously the Aussie move and hawkishness, or apparent hawkishness from, well, that's how the market's perceiving it, going back to FOMC last week and Trump's, junior scares, etc. So we've had that. That's a bit of a backlog, but now we've got a series of events. Most importantly, the ECB market's focusing on Thursday. So, and the RBA and UK retail sales. So there's a lot out there coming up, but not specifically today. So the market's going to be digesting, and it's a range trade day, essentially. You might get some spiking going left, right, and centre, but essentially going into tomorrow, the market's likely to go sideways.
All right, but euro dollar still remaining above the 115 handle. On to dollar yen, which seems to be currently finding some support around the 112 area. I believe that's the area of the 200-day moving average. Just around 112 at the moment. Are you trading that, Ed?
Dollar yen?
Yeah.
I'm looking to buy it. I'll probably catch it a bit later, but dollar yen typically sells off into BOJ, then goes sideways for a couple of days and then recovers. So essentially what I'm looking. Dollar yen is a 108, 114 and a half range, and it's right smack in the middle. So you want to look for a bigger sell-off to buy, or a stronger rally if you like to sell. It's a fade, basically. It's being driven by the 10-year.
Okay, and then on to the last headline of the day. Pound dollar, which had the sell-off actually ahead of yesterday's CPI data. Somebody obviously guessed that it would be a weaker number.
Zach, have a look at it. It happens every time. Someone's leaking that for sure. But anyway, that's beside the point.
It wasn't me.
Well, it wasn't me either. So who
I guessed it correctly, so I didn't need to leak it. So basically, they're 130 the floor at the moment. Is that would you agree with that?
Yeah. Definitely, I think it's a buy into a short-term punt on the upside into ECB, and it's going to try on the upside, but it's not going to gain any real momentum until these events are clear.
All right. Okay. The next slide is what we were doing last night.
What were you doing last night, Zach?
Apparently there was somebody with a euro bucket on their head, and somebody else standing behind them. What does this slide particularly illustrate?
That I get bored sometimes, and I like to play around. No, it's essentially what it's saying. It's two things that are driving people worried about healthcare. Obviously, with Trump, he's got a couple of votes astray, and is looking to change the U.S. constitution to get his own way, which is a bit of a bold move. Good luck with that. But basically, obviously, that's weak for the dollar if healthcare comes scuppered in one way or the other. But really, it's the next 48 hours is going to be all about the ECB and whether they're going to taper. They're not going to likely to taper. That's why the bear is saying he can't see taper, because everyone's talking about September now, and there's a couple of comments and reports about investigating how they're going to taper or not. So what we're really looking for is an intimation from Draghi as to whether we're going to see anything in September, and any hints as to what we'll see. He's not likely to come out with anything concrete tomorrow. It's going to be more of a nuanced play, which may disappoint, may excite bulls and bears alike, but it's likely to come back down within the range.
Right, going on to the 10-year differentials, looks as though this is covering it quite well for all those four crosses.
Dollar pairs. Yeah, the market's being driven. It's unusual because July is typically a chop month where things and volatility is typically low in July in currencies, but that's not being the case. It's been driven, they're trending, and they're, well, exception of dollar yen there, but they're trending on the back of not so much the US 10-year US notes because they're going sideways, but more the non-US, which are allowing in relatively what should be quiet months to allow those interest rates in the 10 years in Canada, in Germany and Australia, and even in Japan for them to drive the markets, which is why currencies are trending. And it's correlating, which is quite unusual to see at this point. There's very high correlation in currencies between the currency pairs and their differentials.
Right, so the dollar index structural match, is that going well?
Yeah, the dollar index. Yeah, exactly. If you look, I don't know how much people can really see here, but it's following a move back in 2009. We ran it up. It hits a major 103.50 target and backed off and sold off aggressively. And it's actually following the previous price action. One thing we do at Matrix is we try to identify what's driving a market and see if those conditions are similar, and therefore if the price actions are similar. And it's following something very, very similar to 2009, which is slightly ahead of all the other asset classes in terms of its positioning within the likely developments for the next year. But either way, it's saying we're coming into 94 support. It's going to struggle below 95, ramp, goes sideways. So it's, as you're saying, we may well get back to the traditional July markets of ranging and chopping before that trend. Once we get the hype back up in the dollar, we see it come off again. So it's fun and games as far as the dollar index is.
On the events slide that we're looking at the moment, what's the key one to watch here?
I actually think euro sterling, but that's put that aside a second. The euro's getting frothy and toppish. You can see typically it sells off into ECB before it stabilizes. I've only shown part of the map there as a flag. If anyone wants to see more, they need to come on to Matrix Trade. And obviously I mentioned Bank of Japan, how it sells off, rallies, sells off into after the BOJ. And UK retail sales, it's flip a coin. Have a look at what happens 20-30 minutes before the release, see if it starts moving sharply and someone's leaked it. But for me, it's euro sterling because it's looking, typically it sells off on the back of the euro. Typically it sells off on into ECB, which gives us an opportunity. If you look at the next chart,
yep,
euro sterling, really interesting chart. Essentially because it's retraced exactly 61.8% of the rally of the previous post-fat finger decline, and now is back in the range and is trying to get back above the previous range, above 88, 65, 85, and basically we sold it looking for a movement back down to 86.5, probably not this week or maybe not even next week. It may have a chance a month or two along the line, depending on what happens with UK and obviously EU negotiations and Theresa May, God bless her, as to what it does thereafter. But it's a sale above 88.80.
Right, and then on sterling yen,
which I believe is going to be covered by your guest.
Yes, he's ready. How are you today, Hassan?
Yeah, good morning, Gus. How are you?
Right, currencies all over, moving very well all over the place, but is this particular cross a good one?
Well, you see, during the last, yesterday, the UK CPI figure came at much softer than expected. Plus, you got Carney's speech when he was announcing the 10-pound note. He mentioned that the inflation target might be adjusted upwards. Now, this is a bit hard to decipher, honestly, since it can't be really known if it's a negative or positive influence, especially because now we're looking into the BOE, if they're going to tighten monetary policy or stay with a much looser set. On the other side, we have the 145 level, which has been very supportive of it. So I'm seeing a bit of a bounce from the 145 level.
Right, and I mean, is there a particular merit in getting into this cross as opposed to just cable or dollar yen?
Well, specifically, it combines the two. We see there is much downward pressure on the pound, and there is much unknown pressure from the yen at the moment because we're waiting for the BOJ monetary policy meetings. So for now, I see it's a much better entry than either of these two currencies. So I think it's a much better opportunity to go into this cross than just trying to see the both on a separate level.
And do you have any particular target for this cross if it breaks 148, let's say?
Well, 148 has been a very big resistance for it, so I'm not really sure if it can break it. It has tried to test it once and twice, thrice actually, but it has not been able to break it over a long period of time. If you look at the daily chart, you'd see a very large upward trending triangle. So if it can break it, I'm not sure exactly, but it could see the 150, maybe 152. But I'm not really very confident that it can break the 148.
So Hassan, just tell us about your trade of the day, the Aussie dollar.
Well, basically, the ore prices on the iron ore has been really rallying. I mean, 4% over the last couple of days. So that gives much more pressure for the AUD to keep on rising upwards. That's one of my main reasons. Plus, we are waiting on more information from the RBA to see if there is going to start tightening monetary policy as well. Since everybody is starting converging towards tightening, so I'm seeing much more tightening from the RBA. So that is going to give the AUD much more upward pressure.
Right. So for the time being, we go with the trend and the flow at the Aussie dollar.
Yes, very much so.
Well, that's good news. Hassan Kanan, Senior Associate at Royal Financial Trading, thank you very much for speaking with us today.
Thank you very much. Bye-bye.
Okay, back to you, Ed. Let's look at the trading positions on the major crosses. Probably not too much of a surprise in what we've got here. This is obviously retail banks and institutions. It's the whole shooting match in terms of traders, and they're still long of the pound and euro dollar, quite short of dollar yen now.
Well, it's come off the last couple of days. What is it? I've got obviously have a customer base which is essentially global, but I've heard a lot of in the last 48 hours about how in Germany there's a lot of coverage about euro strength, and if once it starts hitting mainstream media, things are getting a little frothy, and also if that's reflected by positions, then then the euro is getting you think the euro is getting a little bit toppish. Hence why you want to be careful about the dollar aspect and the healthcare bill, than maybe selling euro crosses on rallies is a safer way of bucking what is essentially an overly frothy euro dollar play.
Right, the other highlights there are 75% short of dollar Canadian, 60% short of Aussie dollar, good luck with that one, and then 67% long of euro sterling, which is obviously reflecting recent gains, but clearly you're looking for a change in that particular cross.
A change, yeah, back down. I mean, actually no change, because what has it done for the last? Actually, what has it done for the last year? I mean, it's traded essentially an 83, 89 range, so it's got a chance to pull back. Obviously, that's very much dependent going into ECB if there's any scares, but everything is pointing to a pretty much a non-event on tomorrow.
Right. Well, let's focus on just finally the economic calendar for today. 1:30 building permits and housing starts in the US, 3:30 EIA crude oil stocks change, and then 3 o'clock in the morning for those who just can't get enough of the financial markets. We'll have the BOJ interest rate decision, which presumably will decide whether the 112 area holds on that dollar yen or not. But thank you to Ed Matz from matrixtrade.com. That was it, or that is it for FX Street Currencies in Play, brought to you by Royal Financial Trading.